day, all. Ira Epstein of Linn & Associates with your metal market wrap-up. And this wrap-up is for Thursday, the 18th of February, 2021, about 5:25 p.m. Central Time. So we've reopened. You can see you're still headed down in the gold and the silver. Copper market staying up here in the 390s. Maybe it's going to get to $4 a pound. Hard to tell. Strong in the platinum market still. Bitcoin down a little bit, but coming off a $52,000 level, that's big. And if you took a look at the Ethereum ETF that started in Toronto, what a success that was today. They've listed that in the way of both US dollar listed and Canadian dollar listed. The symbol is BTCC if you're not watching it. It's too new for me to be following, obviously, but something to watch. There is it gets its legs. Now, I did attend today the conference that the CME group held on the Ethereum, and I found it to be not a very good one. That's just my own opinion. They're not addressing the issue. They just skirt around it, that now the contract is for the average retail investor to buy the smaller contract, that's the Ethereum, still $50,000. It's 45% of the contract value for the margin, 37% for the maintenance. How many people have that? So what they're clearly after is not you. They're clearly after the institutional investor. That's where they're going to measure their success rate. And they'll count on the ETFs generating enough business that they will have to step in and buy the futures contracts, as that's what they're based on. Now, did I say it was BTCC? That was the Bitcoin ETF. Did I say Ethereum? I might have made a mistake there. It was the Bitcoin that was there. So I'm very impressed that came out, and that's where the public's going. They're not going to the futures market on those digital coins because I think the exchange has it wrong. I think the Merc does a great job in many things, but I don't understand why they don't make a contract that people can afford. They gave their reasons, but I thought that they were not the best. All right, doesn't matter what I think. Dollar index down. You can see you're getting a bounce again in the euro and the other currencies. You talk about whipsaws, that's where they're occurring. But this is all about the metals. And in the metals, how could you argue that the bias is down? You're staying under the 18-week average. The momentum has been falling. The trend of the market down. You're back into this last support zone right here of where the market's at, and it's been going in stages to the downside. You can literally see it on the swing lines, lower highs, lower lows, just falling away on it. When we look at moving averages, you're about to get the 100-day to cross over the 200. You need a pretty dramatic event to stop that from occurring by the close of business Friday. Doesn't have to happen today, but by the close of business Friday, we should see that is in fact the case, that you've got that, and that's not a bullish sign. That gives you layers of resistance. Now they're lined up in a bearish scenario. When you take a look at the Bollinger Band, well, the market's trying to stay to the right-hand side, okay, but it keeps hitting it and just riding it to the downside, and momentum is oversold. So an oversold market that's making new lows for the move has come crashing down from the 1960 level to almost $200 lower since the beginning of the year. And folks, we're only at February 17th. That's one heck of a break this market has seen, and it's proving that it's not the favorite of where the investors are moving for the protection of that asset class. They seem to have moved on to the Bitcoins of the world. The gold-silver ratio, well, it's correcting a little bit. You can see that. You're still underneath this red line, which is the 18-day average of closes, which gives silver overall still an edge on it. But as you can see, this market's having great problems here. I think, now you want to see if the market does anything in this general area. If it pokes through and under 26.90, 390, let's call it 26.94 on a closing basis, you could get even more bearish. You'd have lower highs, lower lows. To break the bearishness of the market, you don't want to do that, but you also would want to take out 27.59.50. If you take out the high of an outside day down, which is exactly what you had today in the market, you took out the range of Wednesday, high and low, closed lower on the day. Take that out. Markets often then say, that's a trap for the bear, and I want to head higher. Could be that number. But without doing it, certainly a challenge of the 18-day average. You're not too far away from it, about 8 cents. And momentum's still drifting in this market. You're not in oversold territory either. You're at a 30 reading. You have to be under 30 to be oversold. In the copper, fully embedded. First day back from the lunar holiday for a lot of Asian economies that celebrate that. And as you can see, running very hard in this market. So there's the buying coming right back in. Is it getting overdone? That's a relative term. The trend is up. The market's embedded. Until it peaks, it hasn't peaked. In the platinum market, it too is not embedded, but it's staying in a bullish pattern. I'd be a bit cautious about this one. Doesn't seem to be as strong as the copper market. I say that because it's overbought, and it's not leaning and just every day staying on that upper Bollinger Band. Take out 1231.80, it'd be a sign the market on this peak may have just done that peak temporarily. But I think there's just so many people betting that as the world economies come back online, as more and more vaccines get out there, and I write tonight about how many vaccines are going to be out there. The Biden administration's really making a lot of progress in the United States of getting these. I would imagine Europe and the others are going to get them also from these medical companies, and we're going to see that come out. So the good news is that in the U.S., at least, the COVID cases dropping, other areas dropping with it, hopefully the deaths, and we're going to start looking forward to spring. You see that already. You got the spring bounce in copper and in the platinum market. Palladium, no. The palladium market, as I've said, it's having its own problems right here at the 100-day average. Now, with today's action, you've set up lower highs, lower lows. Admittedly, the market is over the 18-day average, which means the support on a break should be down there, but the trend is down, the bias is up, and you're overbought. A difficult market to try to be a hero in. Either way, it's just not giving bears or bulls much to do. And in the dollar index, now if you can tell me why the market yesterday was up 44 points and today down 35 of those points, write me. I mean, it's just noise in the market that I'm seeing going back and forth. Frankly, if you looked at today's economic data, yeah, I know that we saw one of the housing numbers wasn't the best, but the permit number was way up. Everything else, the Philly Fed, as I was looking at all these other numbers, they weren't so terrible. We'd expect a slowdown here. We have a COVID case. We have shut-ins. We know it. But it's still looking good, yet the market not going. And every analyst still talking. And I can't get away from when you watch Bloomberg as they say, this was the big trade of the year. It hasn't gone anywhere. And they're right. This is 2021. You're about where you started the year out. This was supposed to be the big break. That certainly did not work. What is happening is the dollar has to figure out what to do with rising interest rates. Is that supportive to it, or does that hurt the economy down the road? Because they are creeping higher in the 10-year and the longer end of the curve yield. I talked to you here about a lot of technical ideas and the charts and so on. If you don't have our volumes 1 and 2 of these, you want to get them. Now, I know I've shown this ad a few times, and we'll have new ads coming up, but I first got to finish what I've got in terms of the enhanced charting courses on Bollinger Bands and slow stochastics, praying that I can get something done this weekend. And then I'll get back to special reports for you and everything else. But as you can see, we cover everything in these. Our good friends Modern Trader Magazine put this out. We put it out with them. If you'd like to get it, it's really simple. It's free. We send you the links. You can print them out. They're about 20 some odd pages each one with the displays and graphs. It's a great way to learn. How do you get it? Go to our website, free offers. You can pick it up there. I'm Ira Epstein. You have a great day. I will talk to you later.